Hello traders. Today is the 16th of September 2012, and the time in London is 17:44. In New York, the time is 12:44 p.m. Happy Sunday to you all. The title of the video is The Secret of the S&P 500. We are looking on the yearly chart of the S&P 500, which represents the markets, talking about the trading triangle, the market first, then the sector, before the individual financial instrument. The heart of the trading triangle, we have the leaders, the news, and the fundamentals. The news, the fundamentals, and the leaders can change the dynamics of the market at any point. Okay, so we want to pay attention to the market first, but we do not forget, okay, the heart of the trading triangle, the leaders, the news, and the fundamental. When you are using a technical trading, you must pay attention to the leaders, the news, and the fundamental. The level we are watching for the S&P 500, talking about the secret of the S&P 500, is 1500, a very, very important price level. One cannot afford to forget or to ignore or to disregard, okay? All right, the level of 1500. All right, this is the red horizontal line right here. In the year 2000, the price went to the zone of 1500. That was a hot spot in the zone because the price did change direction here. All right, telling trader to be very, very careful, to watch out for the level, of 1500. In the year 2007, the price retested the same level in the zone of 1500. Price went down big time as it did in 2000. We are now approaching the same level, 1500. The price now at 1465, only 35 pips away from the critical, a key level of 1500. Write it on your wall, on your fridge, okay? All right. Very important price level. If you are trading the major indices, the FTSE 100, the CAC 40, the Dow Jones, the Nasdaq 100, okay, or the Shanghai Composite, any other major index, okay, the Nikkei 225, or if you are a trader or a serious trader, you must pay attention to the market, talking about the trading triangle. The market is approaching a very important price level. Last Friday, I have closed more than 50% of my portfolio, okay, because of this level of 1500. All right, this is what we see on the yearly chart. I want you to remember that from the year, okay, 1980, right here, the price was bullish, okay, up to the year, okay, 2000. That's okay, 20 years bullish run. Now we see in the language of Elliott wave a kind of correction after 20 years bullish cycle, almost vertical. All right, the year from 95 to 2000 was vertical. All right, the price almost took the vertical move. See from here, almost took the vertical move. Price went down from 1500 zone in 2000, in the year 2000, and again here. Now what we see in the language of Elliott wave, we see 1, 2, 3. The price now going up. Okay, if this happens to be a corrective move after a bullish move, 1, 2, 3, we must first acknowledge the level of 1500. If, ladies and gentlemen, if, do not forget if the price breaks above the 1500, I will draw it for you, and retested the 1500 and find a support on the 1500, and the price starts displaying higher lows and higher highs, the price has a high chance to repeat another move to the upside, which will be another 20 years move. The range of that move is quite huge. From this, I'll put it very conservative in the zone of 141. All right, call it 150, 150, call it 150. Okay, up to the zone of 1500. Okay, moment please. I'm still here. Moment, please, ladies and gentlemen. I'll come back to you in a minute. 1 second, please. Thank you. Which is almost, okay, 1,350 pips from the level of 150 to the level of 1500. All right. We have 1,350 pips. If the price break above the level of 1500, talking about the price going above, bullishly above the 1500, and retesting, okay, giving us a kind of corrective move, okay, 1 2 3 or 1 2 3 4 5 15 wave or whatever it give us here, giving us a corrective move, not impulsive move, which means break above it and give us a corrective move to retest the 1500, and then the price number 1 indicator giving us a direct, a bullish signal here. We will take it. The price has a high chance to repeat the same move from here up to this level here, which is the 1,350 move, giving us the ABCD chart pattern, not ABC corrective move, but ABCD chart pattern. If you do not know ABCD chart pattern, go to www.stochastic-macd.com. So we will have the A in this zone, the B in this zone, the C in this zone, and the D in the future up here, which will be in a zone of adding 1,350 to the level, the key level of 1500. Moment, please, ladies and gentlemen. That will bring the S&P 500 in a zone of 2,850. That's a very, very, okay, aggressive projection. All right, that's a very, very aggressive projection, 2850. That remains to be seen. We do not want to forget the median line of the range of 1,350, okay, which is the median line projection half of the range. Moment, please. I want to make myself very clear to traders, which means from the level of 1500 to the level of 15, from the level of 150, 150, 150, 150 to the level of 1500, 1500, the median line, which is somewhere here, okay. If you project half of the channel to the other side, if the price break above the level of 1500, retesting the final support, that will be the first target before the greediest target of 2850. That remains to be seen, which we will have A in this session, if you allow me. This is about the secret of the S&P 500. We can note it down this level of 2850. So that will be the A session here, the B session here, and the C session here, projecting the same distance from here to here, from this level up to the other side, big time, okay. That remains to be seen. In fact, my projection was not from here, but from the top of this candle here. We want to watch the median line of the range of this bigger channel here. Talking about a bullish move in the language of Elliott Wave, and a corrective move, 1, 2, 3. That remain to be confirmed, ladies and gentlemen. That remain to be confirmed because we are now approaching the level 1500. The price must break above it. Does not mean that buy straight away break above it. The price may break above it, retest it, and consolidate here for many, many years. So instead of break above, retest, and go away straight away, you may see break above, retest, and blah, 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 blah. Probably even deep below it, but that remains to be seen. But the key point we want to remember now on this yearly chart is the level of 1500, which is a very important resistance level. Traders should trade cautiously and be very, very defensive as the market slowly but gradually is approaching the level of 1500, the level where the price went down in the year, okay, 2000 and also 2007. This is the election year in the United States. In November there will be election. The market will find it very, very, very difficult to go down. Why? Because go to the mind of the politician and the Fed. It was a bearish season beginning of this administration. We will not accept another bearish season at the end of this administration. The market will find it very difficult to be bearish. It may drag it slowly but gradually, okay, up to the level of 150, even go above it a bit. Wait until the election in America, and we will see what will happen. All right, whether we'll bring it back down or we will start a new bullish cycle. There is a bit of distortion in the market, as I explained to traders before. All right, most stocks are very, very bullish, but the S&P 500, which is the market itself, is going on one leg. All right, so we will see what will happen. On the yearly chart, the level we want to remember is 1500. Moving on very quickly to the monthly chart, the secret of the S&P 500. On the monthly chart, we want to use the pitchfork tool. If you think that pitchfork tool is a very difficult word for you, or something that you do not understand or you don't want to know, I invite you to go on www.youtube.com, watch excellent video from my fellow traders about pitchfork tool. It's just highlighting the media line of a movement. So you probably see here, the price went down from here to this level here. You see, from here down to this level here. We choose one single point here, and we draw a line to the center of that move. That's all. Let's see about the pitchfork tool. And then once we draw this point to the center of this move, we draw other two parallel lines to this center line, which is the top one here, and another one here. This is about the pitchfork tool. The pitchfork tool sometimes will highlight, very often we highlight hidden support and resistance level. On the monthly chart, I'm drawing here the pitchfork tool for the S&P 500. The price above the median line of the pitchfork tool, which is this line here, if you like. We can color it okay, in black, okay. That's the median line here, you see. So the price may be going blah 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 blah, going like a crab, crusher combo. If you like American food, crusher combo with mussel and spicy sauce, you may see it going like a crab along this median line that remains to be seen, okay. But the direction now, the market is waiting for the market. The traders and the market participants are expecting the S&P 500 or the market to retest the level of 1500. We will see what will happen. We do not assume anything. We do not want to forecast anything. We just want to keep our eyes wide open and follow the price, okay, understanding the language of the price, higher lows, higher highs, lower lows, lower highs, equal lows, equal highs, the market pattern first before anything else. All right, so attention to the media line of the pitchfork tool on this, okay, a monthly chart. All right. The next thing we want to remember on this monthly chart is the media line here. You see this horizontal line here. If you like, we can color it in blue, okay. It's a nice color, okay. The media line, okay. You see the center of this one, the horizontal line going to the center of this move. The movement from here down to this level here. It's a 50% retracement of this bearish season that has started in 2007. The price now above the media line of this bearish move to the downside, which is the blue line here, in a zone of call it 1150. You do not want to forget this level, ladies and gentlemen. 1150. As long as the price remains above 1150, it's in a bullish zone because we are above the 50% zone. You can see here the price went above it here. First time it went above it, crashed below it, which is expected. Alright. Then it went above it again and retest it again. Alright. And then it found a support. It's in a bullish zone. Alright. 50% retracement of the bearish season. We are above it. Alright. Alright. Right here, the blue line. The level of 1150. Do not forget it. 1150, 1500. Do not forget those two levels. We are above it. So we have a channel here, which is this channel here. We can draw the media line of this small channel here. You see the white horizontal line here? That's the media line. What did I say? Projection of the channel. As the price goes above the media line of the bigger channel here, we will start projecting the channel, which brings us to the 1500. Here, see the media line right here, the white one of this channel here, from the blue line to the level of 1500. We are above the media line. So this level also is a very important level. So you do not want to forget that also. I'll tell you now, 1328. 1328. So 1150. Now the level you want to work is 1328. Alright? We are not above it. Do not forget also the pitchfork media line here. If we hit the level of 1500, we may see a bit of reaction. Smart conservative trader will take profit. By all means, they will take profit. At least they will move their stop loss. Alright, they are not stupid, okay? So if you are swing trading, be very cautious as the market is only short 35 pips away from the major resistance level. The best scenario is start taking profit, okay, gradually, steadily, without committing yourself for long run until we go above the level 1500. Above it, no chase it, just be patient. Let the people chase it first and give you a healthy pullback and receive a clear-cut signal to buy. That will be after the election. That will be a better time after the election in the United States. Talking about the trading triangle, the market first, the sector before the individual financial instrument. A lot of traders can trade, but they do not use the trading triangle and they are making wrong decisions. Alright? You want to get it right. Okay? So price, if it goes above the level of 1500, what do? We will project half of this channel, which means you see this channel here, the red one and the white one. You see? This small channel. Alright? We will project it to the other side. Okay, from the level of 1328 to the level of 1500. Call it a gap of 180 pips. Project it. As soon as we see it goes above it, we will project it, which we draw a line on top here. The projection of this channel. The red and the white. We project it to the other side. Alright? Always remember the media line also. If it goes above the level of 1672, we will project it again. Projection of the channel. We can project the bigger channel. Okay? If you want to know the projection of the channel, go to www.stochasticmarket.com. Alright? Alright? So this is about the monthly chart. Going to the weekly chart, what can we see? We start drawing lines, okay? On the weekly chart, ladies and gentlemen, things are becoming very clear to us. So do not forget everything that I've said so far. I will leave my line like this because I don't want to remove it, okay? So I'm going to draw another line on the weekly chart. I'm drawing this point. And I'm just drawing a line, okay? Drawing this point, and I'm projecting this, okay, into the future. And this time, okay, I'll color it into pink, okay? So this point and this point allow me to draw this line. See how the price here, retest it here on the dot. Now you see how now it did below it, it come back to retest it here. Now we are approaching again the same pink line. So do not forget, okay, on the weekly chart, this pink line, join this point and this point. So as we are running in, if it goes above the 1500, it will try to retest the pink line. It makes sense? It's powerful. Alright, because these are what we call les lieux de rendezvous. Very important meeting point for traders. The professionals do not forget that. The next level I want to draw again, this point where my cursor is, and this one here. On a weekly chart. Again into the future. Leave it on my chart like this, and I'm going to color it this time. Okay, I'll use turquoise this time. Alright, so here. So we are now drawing this point and this point here. We are above the turquoise trend line. We are going above it, so we want to watch it. If it's going to be bullish, it must stay above it. But I would prefer, as I explained to you, roll it back down a bit. But the S&P 500, which is the market itself, has a good reason to continue the movement to the upside. I would prefer, to be honest, I would prefer the S&P 500 to continue the bullish progression, though it's vertical a bit here, up to the zone of 1500, okay? That will be better. I don't want it to pull back now because it's now above the turquoise line. Let it move away a bit from the turquoise line before pulling back to it. So continue the movement to the outside to the 1500 and then pull back nicely, okay, if you're going to do it along the turquoise line. This is about, okay, the weekly chart. Alright, ladies and gentlemen, moving on to the daily chart, talking about the secret of the S&P 500. We don't want to discount the 6th critical price level, especially the most influential critical price level, okay, of the market itself. Alright, this is the daily chart. As you can see, there is a bit messy here because of my drawing from the yearly chart down to the daily chart. Okay, what can we see here? There is a channel, you see. There is a channel. You see between this turquoise one, the turquoise line, and the black one here. So it did below it, blah blah blah. Okay, so we are not above it. We can perfectly on this okay daily chart project this channel. I'm talking about the turquoise line and the black line here. There's a rising channel here. Now the price above the rising channel, we can perfectly project that channel. Okay, something like this. I don't have rooms to draw it, so if you accept that, okay, we can project it. All right. So if hold on, please. All right, project it into the future. Okay, straight into the future. Okay, just equal size of the channel, project it to the other side because we are now above it. This rising channel. So apart from the pink line, we want to watch also this top of this projection. You can't see on this chart, but you understand what I'm saying. Okay, going to the hourly chart. Okay, those who love the hourly chart. Okay, on the hourly chart, what do we see, ladies and gentlemen? Draw lines. Okay, simple. What do we see? The price pattern, market pattern, trend, post trend. Okay, and we want to get it right. As we see for the Euro USD, the price was consolidating between these two lines, white lines, and suddenly give us a higher low. Okay, here, and it brings above this. Okay, if you because some traders complain that okay, I'm using some funny colors, and there were some comments, they were not happy about it. I understand. I'm doing my best. Okay, so my apology for some traders that were complaining that I'm using a black background, they can't see anything. I should use one color, but I understand. Okay, I'm just playing with different colors. Okay, I don't want to use the same color all the time. All right, so this channel, the blue one. Okay, so we see ups and down. This is a consolidation on the hourly chart, and then boom, above it. All right, it staggered here. There was a smaller consolidation, and then now we did a bit of blah 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 here. So do not be afraid to draw line. It's your chart. Okay, your broker cannot stop you. Okay, all right. So on the hourly chart, what can we do, ladies and gentlemen? If I move my line to make it parallel, okay, like this, what do? We project it. Okay, don't be afraid, project it. Okay, just what you can do first, okay, is to extend this line first, the blue one. We extend it. Okay, you can see that. Okay, you can see that in fact when it went above it, it tried to retest it here. Okay, but what we can do, as we are now out of this rising channel, as I did on the daily chart, we can do exactly the same thing. Okay, on the hourly chart, like this. I hope it makes sense to you. Project that channel, the rising channel on the hourly chart, because the price that's above it, we project it. Okay, equal size. Okay, if you like, I can extend this one. 1 second, please. Let's do it properly according to the rules of okay, TC2000. I'm using TC2000. Excellent software. Okay, all right. So this channel here, we project it to the other side. So we are watching this one. This is what we see. Okay, on the hourly chart. As you can see, ladies and gentlemen, trading is about making decisions. Alright, but we want to make decisions at a hot spot in zones and understanding exactly what the price is doing, okay, and where the price is, okay, and also going into the mind of other traders. Talking about the secret of the S&P 500. The secret of the S&P 500 is about the support, the most important resistance level, the key levels, okay, that are governing, so to speak, okay, this market. One of them, as I show you on the yearly chart, we are approaching that key level. If the market is approaching a very important level, all professionals take note. 1500. Alright? You do not want to forget the level of 1150 and the level of 1328. Okay? This is about the secret of S&P 500. We have also mentioned about the Elliott wave, an impulsive move, a corrective move. It looks to me we have 1, 2, 3 that remain to be seen until the price finds support above the level of 1500. usual. If the bullish momentum is maintained and the price finds support above the level of 1500 and start disturbing higher lows and higher highs, the price can continue the movement, okay, to the future above the level of 2000. That remains to be seen, as I explained to you, is a very aggressive projection. This video is for educational purposes only. It's neither a statement or offer to buy or sell any financial instrument. It is primarily for the TSTW at 24 traders. Until the next time, enjoy yourself and be very happy.